How's it going, YouTube? My name is Ari and welcome back to Blue Lion Finance. If you are returning, however, if this is your very first episode of Blue Lion Finance, allow for me to personally welcome you here. And I want to share with you that this channel is all about investing as well as my personal journey to amassing $100,000 within my Vanguard brokerage account. Now, video to video, I always give an update. So as of today, that account is sitting at $72,265.39. It is great to see that this account is back above the $70,000 mark. At the peak of the pandemic, we were sitting at $74,000. Of course, with all of the market volatility at play, inflation scares, we have been going for quite the ride. The market goes up, down, left and right, and there we are, ebbing and flowing right along with it. Now this week, I am foreseeing more market volatility because come Friday morning, there is an employment report that is going to be released. Now, investor to investor, we should all be made aware of two incredibly important numbers. The very first is if we meet the expectation of hitting around 700,000 jobs that were supposed to be created. Now, the second number we should be aware of is whether or not wages have gone up, because if they have, that's a telltale sign that inflation very well may be around the corner. Now, with inflation scares, the market volatility, that creates stocks on sale, and of course, we always buy the dip. Now, all market updates aside, today's video is going to be all about the 3 stocks that I just bought, about $1,000 worth of an investment into my Vanguard brokerage account. Now, just before we actually dive into today's video, go ahead, tap on that thumbs up button, as it greatly helps me out in growing the Blue Lion Finance channel and getting the word out there. Now, speaking of growth, it is in this video I want to announce my gratitude for the amount of growth that the Blue Lion Finance channel has recently been experiencing. Of course, we've been growing the channel organically, and I'm just happy to say that as of right now, we're sitting at 576 subscribers, making great strides towards 1,000 subscribers. Now, with the gratitude that I felt this morning, I only feel it right that I give back to all of you, because if it weren't for all of you, there would just be no me. So with that being said, once we cross the 1,000 subscriber mark on Blue Lion Finance, I will be sending one lucky subscriber a gift card to One Hope. It is a $50 gift card to One Hope. This is a great place to buy wine. They ship it right to you. You have to be 21 or older at least to enter this giveaway. The rules of the giveaway will be down below, but the main rule is you just have to subscribe and be a subscriber of Blue Lion Finance. So make sure you go ahead, tap on that subscribe button for me while you're at it. And with all of that being said, let's get right to it. So the very first stock on our list is Realty Income. That's ticker symbol O. When it comes to Realty Income, it is a personal favorite of mine. Of course, outside of the stock market, outside of YouTube, I actually work in real estate, so perhaps just a little bit of a bias when it comes to the real estate industry. But I love Realty Income simply because they are a monthly dividend payer. That means they're paying you dividends on a month-to-month basis, which allows you to feel as if you are the actual landlord collecting rent on all of the properties that Realty Income holds within their portfolio. Now, Realty Income was founded back in 1969, so incredibly well established. They've grown an amazing and well-diversified portfolio with over 6,600 different properties spanning across all 50 states, and they even have properties in the UK as well as Puerto Rico. So talk about diversification, you're gonna find it within Realty Income. But even more satisfying is actually when we take a look at their actual clients, or their tenants for that matter, because they have over 600 different tenants across 56 industry verticals. Again, just talking about diversification, they have tenants from 7-Eleven, Walgreens, FedEx, Walmart, Home Depot, and Kroger. So all our storefronts that I am sure you've actually set foot in and had no idea that they were actually Realty Income properties. Now, in the latest news with Realty Income, there is actually just an acquisition. They acquired a company by the name of VEREIT. Now, VEREIT is a smaller scale Realty Income, and that's to say that they have a lot of the same tenants, meaning that the actual acquisition itself is not going to do anything crazy in terms of blowing up the financials for Realty Income. It's just going to add more properties to their portfolio and have tenants that they're already very familiar with. Now, when it comes to their dividends, Realty Income has been paying them out for 25 5 consecutive years, placing them on that sweet dividend aristocrat list. They have a dividend yield of 4.18%. Now, prior to the pandemic, they were trading for around $80 per share. As of right now, you can get them for around $68 per share. That's about a 17 or so % discount, which is exactly why I picked them up. So I bought 6 shares just before the markets closed on Friday, 1 more over the weekend, so that's 7 in total, for a grand total of $478.45. That brings my share count of Realty Income up to 49 total shares. Now, the second stock that I bought over the weekend was Stag Industrial. That's ticker symbol STAG. Now, Stag Industrial is another REIT, but they're not focused on commercial properties. They're actually focused more on industrial assets. So I want you to think about warehouses and distribution centers. They're a little bit lesser known of a market for REITs, but nonetheless, that's a great opportunity for Stag Industrial to just capitalize on, understanding that there's not a whole lot of players within that specific market. Now, when it comes to Stag Industrial, I've been waiting to invest in them for some time now. Foolishly, I waited. Now, I should have actually bought Stag Industrial when they dipped down to about $20 per share back in March. Of course, this is all in hindsight. Prior to the pandemic, they were trading for around $33 per share. As of right now, they're upwards of around $38 per share. Better late than never, but regardless, since their IPO, they've been doing an incredible job in growing their portfolio from 93 properties all the way up to 500 properties. They've also taken up the opportunity to expand across more state lines. So they went from 26 states to 39 total states. Again, just another REIT that's doing an incredibly good job at diversification. However, my favorite aspect of now being an investor of Stag Industrial is the very fact that they are the landlord of none other than Amazon. So Jeff Bezos, I look forward to you personally sending me those rent checks on a month-to-month basis. It's a pleasure doing business with you, buddy. Now, on top of all of that, their dividend has been growing over the past 11 years since they've begun to pay them out. Their dividend is currently sitting at 3.76%. And the best part about Stag Industrial is they said as of right now, they've only tapped into about 0.5% of the market. That means that there is a lot of growth ahead of Stag Industrial, so perhaps it is the perfect time to actually get into the game. I just got my feet wet with Stag Industrial, so I bought 3 shares over the weekend for $115.44. Last but not least, the third stock that I bought shares of was Vanguard's High Dividend Yield ETF. That's ticker symbol VYM. Now, I want to just stop here and mention to you all that the biggest question I had in looking at all of these stocks this past weekend was, where the heck does one invest when the market seems so inflated? Because outside of my retirement accounts, I typically don't invest in ETFs or index funds. I like to pick individual stocks. But with everything being so inflated, it's just hard to find perfect, ripe companies that are undervalued or at least fair price to invest in. But then I stumbled across a video of Jack Bogle, the founder of the Vanguard Group, and of course the mastermind behind index investing. Take a look at this.
Well, we've all been favored with the fruition, as it turns out today, of the ancient Chinese curse. May you live in interesting times. But especially interesting they are, with stocks soaring to unprecedented heights. On that note, then, let me close with 5 simple principles, a few ideas of what you might want to think about, principles of investing that may help you. First, invest you must. The biggest risk is the long-term risk of not putting your money to work at a generous return, not the short-term, but nonetheless real risk of price volatility. Even though stocks seem very high, consider what I said in my book, a little plug there. Never think you know more than the market does.
And there you have it from Mr. Bogle himself. It brought me right back to the simplicities of investing and the importance of just having time in the market instead of always trying to time the market itself. No one knows what the future brings, but getting invested in at least a broad market ETF like VMY is going to give you plenty of exposure to amazing dividend stocks like J&J, JP Morgan Chase, Home Depot, Exxon Mobil, Bank of America, all just companies to name a few. But VMY holds 414 different holdings within the ETF. It has an incredibly low expense ratio at 0.06%, so practically pennies. And to top it off, their dividend yield sits at 2.82%, which is incredibly strong. So I just got my toes wet with VMI, buying 3 shares worth for $317.07. And there you have it from Realty Income, Stag Industrial, and VYM, the 3 stocks that I just invested in. Would love to catch your thoughts. Drop those comments below. While you're at it, go ahead, tap on that thumbs up button. Would love to actually have you along this journey with me. So make sure you are subscribed to the channel. Just go ahead, tap on that subscribe button. It will also get you an entry into the giveaway. Of course, read those rules down below in the description. Now stay tuned for Wednesday's video as well, where I'm going to be detailing out all the dividends that I've received throughout the month of June. And until that video, YouTube, I will see you all there.